Trading Terminology, Part 7. Consolidation. Consolidation is a phase in the market where the price moves within a narrow range, neither trending strongly upward nor downward. It represents indecision among buyers and sellers, and often precedes a significant breakout or breakdown. Why price consolidation happens? After a strong uptrend or downtrend, when the market needs to cool off. Before major news or events, as participants wait for more clarity. When supply and demand are balanced, with no clear directional bias. Support. Support is a price level where stock tends to stop falling and bounce back up. It's where buying interest is strong enough to overcome selling pressure. Think of it like a floor where the price rests before attempting to move higher again. Multiple bounces from the same level strengthen the support zone. For example, if stock falls to $100 several times but never breaks below it, the $100 area acts as strong support. Resistance. Resistance is a price level where a stock tends to stop rising and pull back down. It's where selling pressure outweighs buying demand. Think of it like a ceiling that the price struggles to break through. The more times it's tested, the stronger it becomes, until it eventually breaks. For example, if a stock keeps hitting $150 but fails to move higher, the $150 area becomes a strong resistance level. Key insight: when price breaks through support or resistance, those levels often switch roles. Support becomes resistance, and resistance becomes support. This behavior helps traders spot confirmed breakouts and retest opportunities. How to draw support and resistance. Look for multiple touches. Identify areas where the price has reversed or paused several times at similar levels. Use candle wicks and closes. Combine wick extremes with body closes to define precise zones. Think in zones, not exact levels. Price often reacts within a range, not at a single line. Use line charts for clarity. Switching to a line chart helps you spot key levels more clearly by filtering out noise. Check higher time frames. Support and resistance levels from daily or weekly charts carry more weight. Breakout. A breakout occurs when the price moves outside a defined support or resistance level, often accompanied by increased volume or momentum. When the price breaks above resistance, it signals a bullish breakout. When the price breaks below support, it signals a bearish breakout. False breakout. A false breakout occurs when a price temporarily moves beyond a key support or resistance level but fails to sustain the move, quickly reversing back into the previous range. It gives the illusion of a true breakout, often tricking traders into premature entries, only to get stopped out shortly after. Common reasons behind false breakouts include market manipulation. When large players intentionally move prices to trigger stop losses or lure retail traders. Liquidity hunting. Price briefly breaks key levels to gather orders, stop losses, or pending entries before reversing. Lack of volume or momentum. Breakouts without strong participation often fail to sustain and reverse quickly.